Governor, a little confused about the broader framework of monetary policy. On the one hand, you're saying that you cannot reduce rates right now due to the inflation pressures. You've said they're elevated, highly uncertain, slight hawkish change there to the tonality. On the other hand, liquidity is in extreme surplus, continues to be that way. And between December and February, you have introduced the Operation Twist. It's not clear then what is the framework of monetary policy within which you're operating, and what were you trying to achieve through Operation Twist if it wasn't just bringing down rates broadly?
You'd like to answer that question?
So the monetary policy framework is as defined in the RBI Act, which is, it has the main objective of price stability, keeping in mind the objective growth. That doesn't change. Liquidity management is the operating procedure of monetary policy, the way it is implemented. That remains the same. It's only been simplified and refined, and new instruments are being brought in. Okay. Did you have?
No, I think my question was different. That then why, if you're sort of accommodative, yes, but your liquidity is 2 to 3 lakh crore surplus continuing that way. I know T-bill rates have now moved up, but there was a period where they were close to reverse repo. So there is then de facto another cut. Some private borrowers were borrowing at close to reverse repo, and you had Operation Twist wanting to bring down rates at the long end. So if you wanted to bring down rates, you could have just cut the repo rate, right?
No. You see, there are several options available to the, to the Reserve Bank of India, and we use these instruments. You are suggesting one option, but we decided to choose the other option. And in any case, the surplus liquidity, as I have stated earlier, we are keeping it. We are keeping it. So I have said it earlier also, to ensure that there is better monetary policy transmission. So that is why we are keeping the rate as, we are keeping it as a surplus, because notwithstanding our 135 basis points, it needs to also, there has to be adequate liquidity. So it's only from June that the system became surplus in liquidity. So what and
Operation Twist, for instance, what was it targeted at? Was it targeted at bringing the long end down or pushing up the short end?
Operation Twist is again an instrument used to ensure better monetary policy transmission. As you know, the corporate bonds, corporate bonds, they are benchmarked to the lending rates in the G-Sec segment. So by Operation Twist, if you are able to soften the yields on government securities at the longer end, let's say at 10-year, at 10-year G-Sec, if you are able to bring it down, then that acts as a benchmark for the corporate loan rates. So if the effort was mainly to ensure better policy transmission to the corporate bond market, not so much to manage the yield on government securities. Yield in government securities, it's a kind of it comes in the line of transmission, in the middle of transmission.
So then how far will you go? How far will you go to manage the long end of the curve?
That will depend on the evolving situation. We are monitoring. As and when it is required, we will take necessary steps.